The investor has various options for receiving the money due to him from the scheme on repurchase of units. Check. If the proceeds are paid by the check, the same amount will be sent to the unit holder's address. Electronic modes. The electronic modes allowed for repurchase proceeds to be transferred electronically to the investor's bank account. The redemption proceeds will be paid in favor of sole or first holder of the folio. For units held in dematerialized form, the redemption proceeds will be paid into banks' accounts registered with the DP. It may be noted that for non-resident investors, payment is made by the AMC in rupees. In case of NRI investments, if the payment for the investment was made through an NRO account, then the registered account should also be of the same type. If the payment was routed through an NRE account, then the registered account can be an NRO or NRE account. Next, Instant Access Facility IAF facilitates credit of redemption proceeds in the bank account of the investor on the same day of the redemption request. The monetary limit under IAF is rupees 50,000 or 90% of the latest value of an investment in the scheme, whichever is lower. Next, cutoff time and time stamping. For equity oriented funds and debt funds, except liquid funds in respect of transactions of any amount, purchases and switch-ins should be before 3 pm. Irrespective of the time of receipt of application, NAV of the business day on which the funds are available for utilization without availing of any credit facility before the cutoff time of that day is applicable. For liquid funds, purchases and switch-ins should be before 1:30 pm. Irrespective of time of receipt of applications where the funds are not available for utilization before the cutoff time without availing any credit facility, whether intraday or otherwise, the closing NAV of the day immediately preceding the day on which the funds are available for utilization. Equity oriented funds, debt funds other than liquid funds, redemptions and switch outs should be done before 3 pm. Same day NAV if received before cutoff time. Next business day NAV for application received after cutoff time. For liquid funds, redemption and switch outs 3 pm. NAV of the day immediately preceding the next business day if received before cutoff time. Time stamping. The time stamping on the transaction request is done at official point of acceptance, that is OPOAS. KYC requirements for the mutual fund investors. An investor, both individual and non-individual, including joint holders, NRIs, and POA holders, and its issuers and guardians in case of minors, have to be KYC compliant, irrespective of the investment value. This applies for transactions such as new or additional purchases, switch transactions, new systematic investment plans, that is SIP, or micro SIP registrations received from the effective date, new systematic transfer plan, that is STP, registrations from the effective date, and new transfer of income distribution capital withdrawal plan, that is DTP registrations from effective date. The KYC process involves establishing the identity and address of the investor as required under the anti-money laundering laws. The application for investment must be accompanied by the acknowledgement for having completed the KYC process issued by the KYC registration agency, that is KRA. KYC documents. Permanent account number, that is PAN card with photograph, is mandatory. The following categories of investors are exempt from producing PAN. In case of transactions undertaken on behalf of central or state government and by officials appointed by the court. Investors residing in the state of Sikkim. UN entities or multilateral agencies exempt from paying taxes or filing tax returns in India. Investments including SIPs and lump sum investments in mutual fund schemes up to Rs 50,000 per investor per year per mutual fund. These categories of investors, however, have to provide an alternate document such as Aadhaar card, passport, voter's ID, driving license, or other photo identity card which serve as the proof of identity. Proof of address. Proof of address such as passport, voter's ID, ration card, driving license, bank account statement, utility bill, and other specified documents. PAN exempt investments in mutual fund. Investors must quote the PAN exempt KYC reference number PEKRN issued by the KRA and submit a copy of the letter with the application form. Instead of the PAN, the investors, including the joint holders, can submit any of the following photo identification documents for KYC verification. Requirements for mutual fund investors. KYC registration agencies. Centralized KYC registration agencies. SEBI has instituted a centralized KYC process for the capital market including mutual funds. KYC registration agencies KRAs facilitate this centralized KYC process. Government of India authorized the Central Registry of Securitization and Asset Reconstruction and Security Interest of India CERSAI to act as and to perform the functions of the Central KYC Record Registry under the PML Rules 2005. The registered intermediaries shall upload the KYC data with Central KYC Records Registry CKYCR in respect of all individual accounts opened on or after August 1, 2016. KYC through eKYC service of UIDAI. eKYC service launched by Unique Identification Authority of India UIDAI has been accepted and is a valid process for KYC verification. KYC through intermediaries, where the investors choose to hold the units in demat form, or for applicants who choose to invest through the stock exchange infrastructure, the KYC performed by the depository participant will be considered in compliance with KYC norms. KYC process. KYC process entails the following. The requisite form has to be filled in along with supporting documents. The supporting documents, identity and address proof, are verified with the original documents. Alternatively, the investor can provide a true copy attested by the notary public gazetted officer or manager of a scheduled commercial bank. The original documents of the identity and address proof are returned to the investor after verification, while the forms and supporting documents are uploaded in the server of any centralized KRA. The intermediaries mentioned above are also authorized to perform an in-person verification IPV of the investor, which is mandatory. The name, designation and organization of the person conducting the IPV has to be recorded on the KYC form. An IPV performed by scheduled commercial bank is also acceptable for mutual fund investments. KYC for minors. Where an investment is made by a minor, KYC requirements have to be complied with by the guardian. The proof of age of the minor has to be provided. KYC for power of attorney holder on behalf of an investor. In case of investments by a power of attorney POA holder on behalf of an investor, KYC requirements have to be complied with by both investor and POA holder. A POA holder cannot apply for KYC compliance on behalf of the issuer of the POA. KYC for NRIs. For NRI investors, PAN is the sole identification number for KYC compliance. A copy of the passport or PIO card or OCI card and overseas address proof is mandatory. Additional requirements applicable for institutional investors. Eligibility for investing institution to invest. Authorization for investing institution to invest. This is typically in the form of board resolution. Authorization for the official to sign the documents on behalf of the investing institution. This again is provided for in the board resolution. SEBI has mandated that investors other than individuals have to provide details of the ultimate beneficial owner UBO of the investments and submit documents to establish their identity of such UBOs through any of the identity proof acceptable under the KYC norms. An UBO of a company is one who owns or is entitled to more than 25% of its shares or profits, more than 15% in case of partnerships and body of persons. In case of a trust, this includes the settlor, the trustees, the beneficiaries who are entitled to 15% or more of the benefits. Legal information and mandatory declarations. The proof of identity of the ultimate beneficial owner UBO, such as name, address, PAN or passport, together with self-attested copy and the UBO declaration form has to be submitted to the AMC or RTA. In case there is a change in the UBO, then the same should be intimated to the AMC or RTA. Foreign account tax compliance and common reporting standards. To comply with the requirements of Foreign Account Tax Compliance Act, that is FATCA, and Common Reporting Standards, that is CRS provisions, financial institutions including mutual funds are required to undertake a due diligence process to identify foreign reportable accounts and collect such information as required under the said provisions and report the same to the US Internal Revenue Service or any other foreign government or to the Indian tax authorities for onward transmissions to the concerned foreign authorities. Now there are various transactions. They are called systematic transactions. Systematic investment plan, that is SIP. SIP is an investment strategy where an investor needs to invest the same amount of money in a periodic manner. Systematic withdrawal plan, SWP, allows an investor to withdraw money from making a lump sum investment from mutual funds come in a scheme in a periodic manner on an already set date. Systematic transfer plan, STP, is a plan that allows investor to transfer certain amount from one scheme to another in a periodic manner. Switch, a switch is a redemption from one scheme and a purchase into another combined into one transaction. Dividend transfer plan, DTP, is a facility that allows investor to invest the dividend earned in a mutual fund investment into another scheme of the same mutual fund. Additional requirements applicable for institutional investors, they are mentioned below. A new investor has to submit both the application form as well as the SIP enrollment form to register for an SIP. The enrollment form requires the names, PAN and KYC compliance of the holders of the folio and their signatures. The investment details to be provided in the form include scheme, plan and option selected. The SIP details to be provided are the SIP amount, frequency, SIP date and the start and end date of the SIP period. The details of the bank account that is registered for NECH, direct debit, standing instructions for the SIP should be provided in the form. In case the existing folio is operated jointly, then the SIP form has to be signed by all the holders. The enrollment form has to be submitted to the mutual fund a specified number of days before the first installment, typically 15 to 30 days. The enrollment time may come down if the investors already have a one-time mandate, that is OTM, registered in the folio for making payments. The first installment need not be paid by check if the enrollment form is attested by bank which is registered for debiting the installments. SIP top-up facility. Mutual funds provide an additional facility through an SIP to enhance the disciplined savings of investors. It is called the SIP top-up facility. An existing SIP investor can also register for a top-up facility. The details of the existing SIP such as scheme or plan, frequency, duration and amount have to be correctly provided while registering for the top-up facility. Mutual funds may not offer the top-up facility for micro SIPs, or it may be subject to the condition that the SIP amount and the top-up together does not exceed Rs 50,000 in a rolling 12-month period or financial year. You can see the example quoted. Renewal and cancellation of SIP. To renew an SIP, a renewal form has to be submitted giving details of the scheme, plan and option, SIP amount, SIP date and period. An SIP can be cancelled by giving due notice of the same to the AMC by providing details of the SIP such as folio number, scheme name, option, bank details and mode of payment. An SIP may also stand cancelled if there are insufficient funds in bank account when payment is due. Registration and cancellation of SWP. An SWP will stand cancelled when all the units are redeemed. Investors can choose the cancel SWP by giving notice in writing to the mutual fund giving full details of the mandate such as scheme name, plan, option, folio details, SWP amount, frequency and period. Registering and cancellation of STP and switches. In case of systematic transfers and switches, the source and target schemes have to be selected at the time of registering the STP or switch. The frequency, number of installments and the dates of the transfer are selected by investor in the form for registering the STP. Mutual funds will require a notice period for registering and cancelling the STP. A switch instruction will be given by the investor using the transaction slip. Execution of systematic transactions. Each tranche of systematic transaction will be executed at the applicable NAV on the date of the transaction. In case of transfers, each leg of transfer, that is redemption and purchase, will be executed at applicable NAV for each scheme. The investor will have to bear the loads and taxes as applicable. A systematic transaction can be cancelled at any time by giving the mutual fund notice in writing. Triggers. It is not uncommon for investors to rue missed opportunities of buying or selling because they could not give the requisite instructions in time. This is addressed through the trigger option that is offered by same mutual funds. For each investment under a folio, a separate trigger facility request has to be made. A notice period may be specified by the mutual fund for registering and cancelling a trigger facility. A trigger is one-time facility that extinguishes when the trigger is activated and the corresponding action is completed. Nomination. Nomination can be made in favor of maximum of 3 nominees. Where there are multiple nominees, the unit holders must define the percentage holding for each nominee, making a total of 100%. If the percentage are not clearly indicated, then the nomination will be made equally among the nominees. In the case of joint holding, every unit holder will have to sign the nomination form irrespective of the mode of holding. Only individual investors can make a nomination. Investments by minors cannot have a nomination. A power of attorney holder cannot make a nomination. If the nominee is a minor, then the guardian too can be specified. A nomination cannot be made in favor of trust except a religious or charitable trust, society, body, corporate, partnership, karta of HUF or a power of attorney holder. Change in nomination. A nomination can be changed or cancelled at any time. The change of cancellation has to be made by all the unit holders who made the original nomination irrespective of the mode of holding. When a new nomination is registered with the AMC, the earlier nomination made, if any, stands automatically superseded. The death of the nominee will cancel the nomination made if it is a single nominee. If there are multiple nominees, in the event of the death of one or more nominees, the transmission of units will be made in favor of the remaining nominees. Non-financial transactions in mutual fund. Pledge or lien of units. Banks, NBFCs and other financiers often lend money against the pledge of units by the unit holder. This is effected through a pledge form executed by the unit holder, that is pledger. The form has a provision for specifying the party in whose favor the units are pledged, that is pledgee. Demat account. Dematerialization is a process whereby an investor holding of investments in physical form, that is paper, is converted into digital record. The demat facility is typically initiated by the mutual fund, which would tie up with depository like National Security Depository Limited, that is NSDL, or Central Depository Service India Limited, that is CDSL. The investor benefits from a demat account are as follows: less paperwork in buying or selling the mutual fund units and correspondingly accepting or giving delivery of the units. Direct credit of bonus and right units that the investor is entitled to into investor's demat account. Change of address or other details need to be given only to the depository participant instead of separately providing it to every company or mutual fund where the investor is invested and holds demat units. Consolidate all investments in mutual funds, direct equity, debentures, and others under one account. The investor also has the option to convert the demat units into physical form. This process is called rematerialization. Change in folio details. Some of the information such as name, address, status and contact details are provided during the KYC compliance process. Any changes have to be updated with the KRA using the change form. If the units are held in dematerialized form, the process for a change in address would be as determined by the depository participant. A change in the guardian in minor's folio will require the new guardian to comply with KIC and PAN requirements, provide bank account details and a no objection certificate from the existing guardian. The change in the status of an investor from minor to major will require the PAN and KYC compliance of the investor to replace that of the guardian. The signature of the investor and the new bank account details have to be updated in the records. The guardian will then cease operating the account. Change in bank account details. Investor can register up to 5 bank accounts with a mutual fund for the individual investors and 10 for non-individuals. If the investor has not used the facility to register multiple bank accounts, then the change of bank details form can be used to change the existing bank account linked to the folio and provide details of the new bank account. Transmission of units. Transmission is the process of transferring units to person entitled to receive them in event of death of the unit holder. Change in status of special investor categories. Minors, NRIs, HUFs investing through a constituted attorney constitute a special category of individual investors. Minor turned major. Once the minor becomes major, financial transactions are disallowed in their account. However, after a minor becomes major, they can conduct such transactions only after their signature is attested by their banker. KYC. On becoming a major, the erstwhile minor investor has to complete the KYC details, provide, update bank account details including the cancelled original check leaf of the new account. No further transactions shall be allowed till the status of minor is changed to major. PAN card. The PAN issued to a minor will have to be resubmitted to the income tax authorities for issuance of new card with the same number but the new signature of the minor turned major. Demat account. This involves the opening of a new Demat account. Securities held in the old Demat account with minor status are transferred to the new Demat account. Depositories may waive the transaction charge or such transfers. Mutual fund investments. Accordingly, when a minor turns a major, he or she needs to submit an application for change in status from minor to major in a prescribed form hereinafter referred to as MAM form, along with the prescribed documents. In short, the minor's account is frozen for operation by the guardian on the day the minor attains the age of majority, and no further customer initiated transactions shall be permitted till the status is changed from minor to major. Before submitting the MAM application form for change in status from minor to major, the unit holder is required to first apply for PAN and obtain a PAN card, second, complete the KYC process, and third, change his or her status in his or her existing bank account from minor to major or open a new bank account immediately upon becoming a minor and procure a new checkbook with his or her name pre-printed thereon. Change in status of special investor categories, that is NRI to resident Indian. If a person returns to India and forgoes the NRI status, he needs to carry out certain procedures with respect to his investment and bank account. Once an NRI becomes a RI, he cannot operate his NRO, NRE, FCNR accounts. Demat account. A new Demat account with resident status needs to be opened. All balances held in NRI Demat account shall be transferred to the new resident Demat account. After transfer, the NRI Demat account will be closed. Mutual fund investments. An acknowledgement shall be issued by the KYC registration agency on submission of request and will carry out the necessary change in his records. Once the investor is flagged as an NRI, TDS will be deducted at source on gains made on sale or redemption of mutual fund investments by NRI as applicable. Next, change in Karta of HUF. For change in Karta of HUF, a letter is required from the new Karta stating the reason for change in Karta in mutual fund records. Along with the letter and KYC documents, the following must be enclosed: attested copy of the death certificate, bank certificate stating signature and details of new Karta, indemnity bond signed by all co-parceners and new Karta. Investors' transactions turnaround times. SEBI's guideline prescribe the turnaround times for investors' transactions with the mutual fund is described. Also, the statement of accounts in case of SIP, STP and SWP is also mentioned. Let us solve the MCQs. What term is used to describe the net asset value NAV of the scheme after the dividend is paid out? Remember, the NAV would have dropped to the extent of the dividend paid. A. Ex-dividend NAV. B. Cum dividend NAV. C. Lower NAV. D. Dividend NAV. And the correct option is A. Ex-dividend NAV. Question number 2. At what price are the bonus units issued to the unit holder? A. The price is decided by AMC in consultation with the trustees. B. The bonus units are allotted free of cost. C. At the prevailing NAV. D. At the prevailing NAV divided by the bonus ratio. And the correct option is B. The bonus units are allotted at free of cost. Question number 3. Which of the following statements is true? A. Hindu undivided families HUFs are not allowed to invest in mutual fund schemes. B. Minors cannot invest in mutual fund schemes. C. Foreign investor can invest in Indian mutual fund schemes provided they have completed the Know Your Client KYC formalities.